Stop losses, the most frustrating part of trading. You place it, you're confident in your setup, and then, boom, price sweeps you out, only to run directly into your target. In this video, I'll break down my entire process for protected swings and invalidation, so you'll know exactly where your stop should go and how to turn frustration into consistency. In this video, we're going to talk about stop losses. If you haven't already watched my video on protected swings, make sure to check that out first, because it's essential for understanding what we'll cover here. Let's quickly review what a protected swing is. A protected swing forms when price reaches into a key level either by sweeping a low or tapping into a fair value gap. Once that happens, and price closes above the series of down candles that created that sweep or fair value gap, we can consider that swing protected. So, this close right here confirms a protected swing, and that means I can start trading away from it. Now, the question is, where do I place my invalidation? Well, I can use that protected swing as my invalidation point. If I'm expecting price to move higher and not return to that low, then it makes sense to set my stop loss there. But what about risk to reward? If the setup doesn't give me the reward I'm looking for, I need to think about how price interacts with things like a change in the state of delivery, opposing candles, or order blocks. In those cases, I want to see the mean threshold or the 50% level respected. So, if I want to adjust my risk to reward, one option is to place my stop loss at the candle body instead. By doing that, I can reach a 2 reward target more quickly. Of course, I need to accept that sometimes price will sweep me out with this type of stop loss placement, only to then go hit my take profit. That's just part of trading. Now, one final note before we dive in. This invalidation approach is based on my model, which focuses on change in the state of delivery, order blocks, and fair value gaps. Other traders may use different PD arrays, like breaker blocks, IFVG, or mitigation block. With those, you'll need to decide for yourself where invalidation makes sense. This video is specifically about my invalidation process. If you're using a different PD array, you'll have to adapt these ideas to fit your own strategy. So, with that said, let's jump into chart and walk through some examples of protected swings and how I set invalidation. As you can see here, we have a trend reversal from the 1-hour order block. The previous low was swept, and price closed above the down candles that created that low. So now, with that sweep and the candle close, we can say we have a protected low. If we look closely, we can see that the market's target could be these equal highs above, which also line up with yesterday's high. That means we can look for buying opportunities toward that target. Now, how do I enter? Well, I could enter anywhere in this range. But where would my stop loss go? Technically, it should be under the protected low. And the target would be that high. This setup gives us more than a 2 risk to reward, so it's a valid trade. Another option is to place the stop at the candle body's low, basically marking out the low from the candle bodies and using that as the stop. Or, I can wait for a continuation setup. What does that look like? Essentially, I wait for a new protected swing to form. Let's play this forward and see if we get a new one. Is this a protected swing? Yes, based on my definition. Price taps into an important level, which is a fair value gap, and then closes above the down candles. That gives us a valid entry. I can put my stop under the protected low, and from here I can either aim for 2 reward or trade it back to the previous high. With this continuation entry, you'll notice the risk to reward is actually better compared to the reversal entry. Let's keep going. Once again, price trades into another fair value gap. Do we get the close above the down candles? Yes, we see that after hitting this level, price closes above the series of down candles. So now we have another protected low. With the stop below that low, this continuation entry gives us another solid risk to reward setup. Notice how price came back close to the low but never managed to break it. That's because this low is truly protected. The key point here is this: when a protected low forms, I expect price to trend higher and not return to that low. But if the setup doesn't provide a good risk to reward, I can look for continuation entries instead. These form when price trades into a fair value gap or sweeps a low, and then closes above the down candles that made that low. This is exactly how you track a trend step by step as it continues to develop. Alright, let's jump into another example. This time, we're looking at the Japanese yen, and this is actually a trade that I personally took. We're on the 1-hour chart here, and based on the higher time frame, my expectation was that once price reached this FVG and swept out those equal lows, it should continue pushing higher, targeting this gap and even the equal highs above it. So let's see if a reversal forms here. If we're going to get a reversal, I want to see price run the low one more time and then form a swing. And that's exactly what happens. Price sweeps the low and then we get a very strong bullish close. Now, what confirms a protected swing? It's when we see a close above the series of down close candles. And as you can see, that happens right here. So, if I place my stop under that low and target the gap, that gives me a clean 2 reward setup. But I could also wait for a continuation entry. Here, we see price sweep the previous low again, then close above the down candles, giving us a brand new protected swing. That's another valid entry. Stop goes below the low, and again, the target gives us around 2 reward. Now, let's say I missed that setup. Do we have another POI? Remember, for a continuation I either want to see price run a low or trade back into an FVG. Up to this point, that hasn't happened. Here, we do get a sweep of the low and a close above the down candles, but the problem is, if I put my stop below the swing low, I can't get a proper 2 reward to my target. That's when I need to adjust. Instead of keeping my stop under the full swing low, I can place it under the candle bodies. And if that still doesn't give me the reward I can wait for a limit entry or a retest entry to tighten the stop and make it work. In this case, a new FVG forms. I wait for price to close above the down close candles inside that gap, set my stop below the low, and then enter. From there, price pushes right into target. So hopefully this makes it clear, when a protected low forms, I expect price to trend higher and not return to that low. But if the initial setup doesn't offer a good risk to reward, I can always look for continuation entries. These happen when price trades into an FVG or sweeps a low and then closes above the down candles. I hope this example helped make things clearer. Thanks for watching, and I'll see you in the next video.